So you've got the property under contract. Congratulations, that's a big deal. But if you're sitting there right now and you're thinking, now what? You're not alone. This is the part of the process where most buyers have never been through, have never been through before. And it can feel like a lot of happening at once with a lot of moving pieces and deadlines that you've never really had to track before. This video is going to walk you through everything from the moment the contract is signed all the way to closing date. What happens, in what order, what you need to be doing in each step, and what to watch out for along the way so that nothing catches you off guard. I'm Trent Babb with Ranch Roads Land and Commercial. I specialize in land and commercial properties across the Texas area. And this, quite frankly, is one of the most important videos that I've ever made, because this period right here from contract being signed to closing is where deals get protected and where many of those deals fall through. So let's make sure yours goes smoothly. But before we get into anything else, I want to talk about two dates, because this is the single most important thing in the contract for you to watch out for the moment you go under contract. Your contract has two specific deadlines built in that I want to discuss: the option period, the earnest money and the option fee delivery deadline, the survey deadlines, the title commitment window, the financing contingencies if you're using a loan, the closing date. Of course, you don't want to miss the closing date, but every one of these matter, and missing them could cost you thousands of dollars, your contingency protections, or even the whole deal itself. Your agent, if you have one, should be tracking these all with you. I do that for every single one of my clients, but I always tell my buyers as well is to know your own dates so you know the process of buying. Put them in your phone right now. Don't rely on someone else to do this for you. Time is of the essence in this contract. That language exactly is in the contract itself. And what that means is that it's no grace period, no close enough. The deadlines are real. Now, once your contract is executed, meaning both you and the seller have signed the contract and you have it executed, there are two items, two separate deposits are typically due within 3 days. And I want to spend some time on that because this is where a lot of buyers and sellers get these two terms mixed up. Now, the first is your earnest money. This is the larger of the two deposits, and it's exactly what it sounds like. It's your good faith. It's your skin in the game money. It tells the seller that you're serious about this property. On contracts in Texas, the earnest money is held by the title company in escrow. The amount can be negotiated, of course. All things can be negotiated in a contract, but typically in the real estate world, it's anywhere between 1% to 3% of the sales price. There's no fixed rule on this, but on real estate deals in Texas, you'll commonly see that range from 1% to 3% of the purchase price. And sometimes, depending on the property or the seller or how competitive the market is, that percentage could vary. Sometimes buyers put 10% to show of how serious of a buyer they are to the seller. Now, here's a critical thing to understand about earnest money. It is not automatically at risk the moment you hand it to the title company. That protection is what the second deposit is for. If you terminate the contract properly within your option period, your earnest money comes back to you in full. Now, second, and we touched on this a little bit, but the option fee, the option period, sometimes called termination fee or the feasibility fee. This one is different and you need to understand it clearly. It's the non-refundable amount that the seller is able to get as soon as you hand over that fee to the title company. And this is the unrestricted right to terminate the contract for any reason during that option period. So say you want a 30-day option period, you have 30 days to have the unrestricted right to get out of that contract for whatever reason you feel like. If you wake up on a Monday and you say, I don't want this property, you're able to get out of it within that time period. Time is of the essence with these two deposits in any Texas contract, not just the farm and ranch contract, but the fee is due within 3 days. So you have 3 days of the effective date, the executed date, the day that you and the seller sign the contract, get the monies to the title company. Once that happens, then the title company will receipt the contract. If you don't deliver the monies on time, you lose the unrestricted right to walk away from that contract. So do not wait on this. Now, in terms of the amount of the option fee, the industry standard and any land transaction or residential transaction, whatever the property is, varies. But generally, you're looking at anywhere from $150 all the way up to, I've seen $5,000, depending on how long that option fee or feasibility fee is. It just depends on the property type, the property size, and the purchase price, and how many days you're asking for that option period. Now, the seller keeps this money. This is non-refundable. The seller keeps this money no matter what happens. That's the trade-off. You get these many days of an unrestricted right to back out. The seller gets the money. So you're essentially buying yourself a protected window of time to do your homework without being fully committed to the contract. Now, here's how these two deposits work together in practice. During your option period, if you get there, walk the property, dig into the due diligence a little bit, and find something you don't like, a boundary issue, the access problem, something unexpected in the title history, water that isn't there, that appeared to be there, you can terminate the contract immediately. You deliver a written notice to terminate the contract to the seller or to the listing agent, which under Trek rules is 5 o'clock local time, the last day of the option period. So let's say it's Friday is the last day on the 27th of whatever month. Well, you have until that day up to 5 o'clock to terminate the contract. Then your earnest money is returned to you back in full. The only money that you use is the option fee you've already paid to the seller. So look at it this way. The option fee is what you pay for the right to change your mind if something goes wrong or if you don't like something. And the earnest fee is what's at stake once you're ready to move forward. Now, the length of the option period is negotiated between you and the seller and written into the contract. There's a little space for it. There's a little space for how much money you're giving and with X amount of days. On a residential transaction, you can see anywhere from 5 to 10 days. And on a farm and ranch contract, it's common, and I would argue it's necessary to negotiate a longer window. 15 to 30 to 45 days is not unusual. It sometimes just depends on the complexity of the property. And the reason for that is pretty simple. There's just more to investigate on land deals if you're trying to develop something, or if you're just buying a big farm and ranch property. There's just a lot more to look at than there is on a house in a subdivision. You may need the time to get a surveyor. Sometimes surveyors are backed up and it takes longer for them to survey a big piece of land or a commercial property. So you have to get that scheduled. And the soil, like if you need soil assessment, you need to check water sources, the infrastructure of the property, if it has a city sewer, or if you're going to have a septic system for that property. Review mineral rights, leases, and surface leases. If you have a cattle lease on the property, inspecting any improvements. That just takes longer because there's less information on bigger properties or commercial properties in rural areas or along I-35 or what have you, because there's more homes sold within a quicker amount of time period than there is for land. So if you need 30 days to properly assess the property, negotiate for 30 days. The option fee you pay for that additional time is almost always worth it compared to what you could be missing by rushing those days. Now, once that option fee starts, you must be active and proactive from day one. Don't sign the contract and assume you'll go get it later. Get the surveyor scheduled immediately. Contact the title company to open title. Start pulling on the threads of the water, minerals, access, any existing leases on the property. This is your protected window to find out everything you need to know about the property before fully committing to the property, and it goes much faster than you think. Now, once the option period expires and you haven't terminated the contract yet, you're moving towards closing. And now your earnest money is now at stake if you walk away from the property without a cause. So that's not a bad thing when your option period or feasibility period expires. It just means you've done your homework, but that decision to move past the deadline should be a confident one. Now, one of the first things you want to get moving during the option period or the feasibility period is the survey, because that is the most time consuming and everything else depends on that. Title won't close unless they see the survey, and your lender will not close if you're financing unless they see the survey. So in Texas, for a survey, the property must be surveyed by a registered professional surveyor, land surveyor, or residential surveyor. The survey confirms the exact boundaries of what you are buying. It identifies easements crossing the property, whether that's an electrical power line that's going across it, a pipeline that's going across it, a water line that's going across it, notes on any encroachments on the property, and also produces the legal description that the title company and your lender, if you're financing, will require to close. Just a quick note, there is no contract unless you have the correct legal description on the contract. So make sure when you're submitting any offer that the legal description is on the contract. So on land, boundaries matter enormously. I've seen deals where buyers assume they knew where the property was, and the survey told a completely different story. So don't assume, get the survey done. Even if there's an existing survey on the property, I recommend to get a new survey because you just never know what could happen between the time the existing survey is and the new survey now. Now the Trek Farm and Ranch contract has specific options of how the survey is handled, whether the seller provides an existing survey or whether a new one is required, and who pays for the survey. It's kind of industry standard that the buyer pays for a new survey if they want one because they're the ones that are going to assume the property, so they should pay for the survey. But that's completely negotiable. So make sure you understand what was agreed to in your contract before your deadline passes. Now I'm trying to be thorough in this video. So one more thing on the surveys. Under the Farm and Ranch contract, so the sales price can actually be adjusted on the survey if the actual acreage differs from what is stated on the contract. If the adjustment ends up being more than 10% in either direction, either party has the right to terminate that contract. Know this going in, especially in larger acreage tracts or property that's been in the family for a very long time, where a few acres either way can mean a significant dollar amount. And in the contract, there's actually a little section that the price will be adjusted if the survey comes out to a different acreage, or if the price will not be adjusted if it turns out to be a different acreage size. Now, while you're working through your due diligence and the things you need to find out, the title company is also working in the background, pulling the history of the property. Now, this is called the title search. And what they're looking for is anything that could affect your clean ownership of the land after you close. So that's unpaid liens, judgments, back taxes, boundary disputes, missing areas that need to sign the contract that haven't signed the contract, unresolved easements, and any other cloud on the title. Now, within 20 days of the title company receiving a copy of your contract, they're required to produce a title commitment. Now, this is a document that tells you what the title is willing to insure, what exceptions apply, and what requirements have to be met before they will actually issue the title, the final title policy. Now, when you receive the title commitment, or better yet, have your agent walk you through it with you, pay attention to the exceptions section. Those are the things that the title company is telling you that they are not going to insure. Some of them are just standard and harmless, but some require a closer look. So if you find something in the title commitment or the survey that's objectable, a defect, an encumbrance, something that affects the use that you intend for the property, you have a window under the contract to raise a written notice. So the seller has 15 days to cure that notice. If it can't be cured, you can terminate and get your earnest money back. If it can't be cured, you can terminate the contract and then you receive your earnest money back. Now, this is one of the areas in the farm and ranch contract that is fundamentally different than a residential purchase or contract. And it's the area that first-time land buyers sometimes underestimate. The Trek Farm and Ranch contract has specific provisions for natural resource leases like oil and gas leases, mineral leases, and water leases, and service leases, which cover things like grazing, hunting leases, agricultural leases for hay, timber leases, which you're not going to get a lot of that in Central Texas, but and wind and solar leases, which are coming more and more common. If any of those exist on the property, the seller is required to disclose them and deliver copies of the lease to you within 3 days of the effective date, the day you sign that contract. You then have a negotiated window to review those documents and decide whether they're acceptable or not. If they're not, if there's an active grazing lease that affects how you intend to use the land, or a mineral lease with terms you didn't anticipate, you may have the right to terminate and get your earnest money back, depending on how the contract is written. Now, on the mineral rights question specifically, in Texas, the mineral state can be severed from the surface, meaning the seller may not own what's below the ground, even if they own what's on the surface. This affects your property rights, potential future development, and in some cases, the day-to-day use of the surface if an operator ever exercises their rights. Always ask if any minerals are being conveyed and if there are any existing leases. One note with the minerals, the minerals naturally convey with the property. So if the seller never mentions I'm retaining of the mineral rights, then they automatically in Texas convey to the buyer. Now, this is one of the reasons why having a land specialist in your corner matters. These things don't come up on home purchases. They come up nearly every single time in a royal land deal. Now, if you're financing the property rather than paying cash, your lender is going to need an appraisal on the property. Land appraisals take longer than residential appraisals. Royal Acreage requires finding comparables on recent sales of land that is not always easy to locate. And appraisers familiar with farm and ranch properties aren't as numerous as residential appraisers. So build this into your timeline, into your expectations from the start, and stay in close contact with your lender throughout the whole process. They're going to ask you for documents, tax returns, bank statements, proof of income, information about the property. Get them what they need quickly. Delays on your end becomes delays on the closing table. And closing date extensions have to be agreed to by the seller before those deadlines are up. So if you know that something's going to come in close, you may want to start negotiating with an agent or the seller to extend some of those deadlines. Now, one important thing, if anything changes in your financial situation between the contract and the closing, a job change, a land purchase, a new credit account, tell your lender immediately. Don't try to figure out whether it matters on your own or not. It almost always matters, and your lender needs to know about this. Now, as you approach the closing day, the title company is going to issue you the owner's title insurance policy. Take it. This is not something that you skip. So the title insurance policy protects you if a claim ever arises against the ownership of the property after you close. So this could be something that wasn't caught during the title search, an old lien that resurfaces, a disputed boundary line between any neighbors, an heir that comes along and claims any interest of the land. It's a one-time premium paid at closing, and it covers your ass as long as you own the land. On a farm and ranch land especially, where property history could go back generations, where estate transfers weren't always properly documented, and where boundary disputes are more common than subdivision. Title insurance is genuinely valuable protection, not just a closing cost, item. Under the Trek Farm and Ranch contract, either the buyer or the seller can be responsible for furnishing that title policy. This is negotiated in the contract, so know which way your deal is structured. Within the industry, usually the seller pays for it. It's just kind of a trade-off between the seller pays for the title policy and the buyer pays for the new survey, the existing survey. But either of those are negotiable, so understand the way your deal is structured. Now, as you get closer to the closing date, the title company is going to send you a closing disclosure or a closing statement. This is a full breakdown of every number involved in the transaction. What you're paying, the credits applied for you, how your earnest money is applied. Usually it's applied to the down payment, what the seller is covering, how the commissions to the real estate agents are being split, and exactly what your final amount due at closing will be. So review this carefully. Don't wait until the day before closing to look at it. If something that doesn't look right, you don't recognize a line item, ask. You will also be presented this statement at the closing table when you're signing with escrow with the title company. Double check it, then go through it thoroughly. If you have any questions, your agent or the title company are there to explain every number. Now, a few things that are typically prorated at the closing of land deals or even a residential contract, but property taxes for the current year any prepaid rent if the property has surface leases, and any association dues if applicable. Say you're in a subdivision with homes with acreage. You might have some association dues that go towards maintaining the road, or any little things like that. So understand how those prorations affect your final number. Now there's one Texas specific item worth knowing. If the property has an ag exemption and your intended use would change that ag exemption, there could be rollback taxes assessed. Now under the Trent contract, if your use of the property after closing triggers that rollback tax for the prior years, that obligation is on you as the buyer. This is a conversation worth having with your agent and potentially a tax professional before you close, particularly if you're buying an ag-exempted land for non-agricultural use. Now, if everything leading up to this is handled well and you've stayed on top of your dates and your due diligence, closing day is actually pretty straightforward. You'll go to the title company, or in some cases sign remotely through a mobile notary or electronic closing, depending on how the transaction is structured. You'll work through the closing documents. There are more pages than most people expect, mostly because the title company has been sued, so there's a document explaining this or that. But your closing officer will walk you through each one of them and explain the reasons why that document is there. At closing, the seller is to deliver you a general warranty deed conveying title to the property. That's the deed that carries the strongest form of ownership guarantee under Texas law. They're also issuing you a tax certificate showing no delinquent taxes on the property. You'll wire your funds typically a few days before. The title company will reach out to you and ask you whether you're bringing a check or doing a wire transfer. If you're doing a wire transfer, then they'll ask the appropriate questions. That way they already have that information. But if you're bringing a cashier's check, make sure it's the exact amount shown on your closing statement. Once everything is signed and the funds are confirmed and dispersed, this usually takes, depending on what time of the day that you close, it can close in the same day, but more than likely it's the next day before it's actually funded. And the deed gets recorded to the county, and at that point, the property is yours. But don't just walk out of the title company and forget about the paperwork. A couple of things to handle right away. Make sure you receive a copy of the deed and the owner's title insurance policy. Keep both somewhere safe. The title company will ask you if you want physical recordings or digital recording. Get both. These are very important documents. Now, if the property qualifies for an ag exemption in Texas, get that process started soon after closing. An ag exemption can significantly reduce your annual property tax burden, but it's not automatic. You have to apply for it through the county appraisal district and demonstrate that the property is being used for a qualifying ag exemption purpose. The requirements and rollback period vary by county, so don't wait on this. Now, if there are any existing surface leases, hunting leases, or grazing leases that conveyed with the property, make sure you have copies of those and understand what your obligations are as the new owner of the property. And if you have any questions about what comes next, whether that's building, improving the land, leasing it, managing it, or eventually selling it down the road, I'm always a resource for my clients well beyond the closing day. That relationship does not end when you walk out of the title company. Buying land is one of the most significant financial decisions that most people ever make. The period between contract and closing is where that decision either gets protected or gets complicated. But now you know exactly what to watch out for, what the deadlines mean, and what's at stake at each step. Now, if you're currently under contract and you have a specific question about where you are in the contract, feel free to reach out to me directly. The link to book a call with me is in the description below. I also have it commented or pinned in the comment section. Now, if you're still in the early stages of figuring out whether your buying land is right for you, keep watching. I've got videos that cover the process from the beginning, starting with what to look for when evaluating a piece of land, all the way through what the buyer rep agreement and how I work with buyers to find the right property. All of those links are in the description below. Thanks for watching this video. We'll see you in the next one.